there. Roots today announced its financial results for its second quarter. Sales are up, but the company's still not turning a profit. Let's go to Meghan Roach. She's president and CEO at Roots. Thanks for joining us today.
Thank you for having me.
All right, so sales are up 6% year over year, coming in at $51 million, I believe. What products have been doing well so far this year?
Well, I think the most important thing to know as a starting point is that if you look at our sales overall, we did have a 6% increase in total sales, but our DTC business, which is the stores and e-commerce, they were up about 12.7%, and we had 17.8% comparable store sales. So that's fantastic. And when you look that through to the bottom line, I mean, we're a seasonal business. So we typically lose money in the first half of the year and generate all our income in the second half of the year. So we actually reduced adjusted EBITDA losses by almost 50% in this quarter. So we're incredibly happy with the results. And to your question about products, I mean, a lot of things did well. Our lifestyle products, our active products, our sweat products, all of them did well across the board, which really speaks to the diversification efforts we've been making over the last couple of years.
I did look at your EBITDA over and your earnings per share over quarters, and I didn't realize it was a seasonal business. Why is it more of a seasonal business?
Yes. I'm sure one of the things you probably think of when you think of Roots is warm, cozy, soft, something like that, right? So the reality is that our first half of the year is only about 30% of our sales and 70% of our sales in the third and fourth quarter. Back to school is big for us. We're a big gifting business, so the holidays are big for us. And so as soon as the weather starts turning into this beautiful fall weather we have today, people start thinking about the cozy comfort that Roots brings.
Okay, so that being said, you're still at a net loss of over $4 million. When was the last time the company reported a profit?
Well, we report a profit every year, actually. So annually, we actually report profit every single year. But on the Q2 and Q1 basis, because we're a seasonal business, those tend to be loss periods for us. And if you look at our overall sales base, I mean, we're not a massive company, right? So when you look at kind of like 250 around that in terms of sales on an annual basis, on a full year basis, Bruce has made a profit actually every year since I've been the CEO of the company, which has been about 6 years, and all the way back to the IPO in 2017. And the good thing, too, to note is, again, reemphasizing the comparable store sales growth, we've had 17.8% comparable store sales growth in this quarter, and that's the highest amount we've had since we became public in 2017.
So what was the profit last year?
Sorry, on an annual basis?
Yes.
Yeah, so we exceeded $20 million in adjusted EBITDA last year.
Okay. Is there an overhang for the company? What do you see as the challenges for the company?
I think we have a lot of opportunity ahead of us, actually. I mean, if you look at the business today, you know, we've expanded into some new product lines. So our active product categories have continued to drive double-digit growth. We have a business in Taiwan. We have a business in China that's growing rapidly. We see lots of international opportunity for us. And from a product line extension perspective, some of our new sweat fleece, so things like Cloud Fleece or our new Rome collection, which I'm actually wearing today, are doing really well for us. So I really see more opportunities in the future from a business perspective than challenges. I think obviously the market has been a bit volatile from an economic perspective, given what you're seeing internationally in the tariffs and the trade war, but Roots has been able to manage through it very well.
Is Roots affected by tariffs? Where do your products come from?
So our products are sourced internationally. We have a big business in Canada, as you would know. And so as a result of that, very minimal impact from a tariff perspective. But we have a global sourcing network. We do manufacture in Canada. We still have a leather factory that today is based in Toronto. And so all of our leather products, handbags, jackets are made in Canada. But other than that, it's an international sourcing base, which really reflects the diversification of supply chains over the last couple of years for all companies.
So, Meghan, who would you consider to be your competition?
I think our customers believe that when they look at Roots, a lot of the brands that they consider are really outdoor brands. So things like North Face, Patagonia, people who have incredible quality like Roots does from being around for 50 years, people who you can use in and outside. So it's not just an indoor brand, but really one that people default to when they're traveling or they're exploring, doing hikes, walks, etc. So some of those brands typically come to mind. And we've seen on an international basis that outdoor heritage is something that people keep coming back to again and again, and the quality associated with the brand.
Okay, because I was looking at other Canadian retailers like Lululemon, which of course is in sort of yoga wear and sort of what people are wearing to work more and more these days. And their stock, as you know, is at $165, and that's at a low point. You guys are at $3.
Yes.
For investors' perspective, how do you say to investors, you know, you're at $3 when you have another Canadian retailer here at $165?
Well, I really think you're comparing apples and oranges, right? I mean, Roots as a business is a fantastic business, but it's very small on a relative basis compared to some of the brands you mentioned. I mean, I think if you look at a few things, I mean, Lululemon is really, really significantly bigger than us, right? They make more in their quarter than we do in a sales basis in an entire year from a profit perspective, right? So very different business models, very different segments of focus that they're on. So very active focused, obviously. Roots is a lifestyle brand that's focused on sweats business, and they're in many, many international marketplaces. So I think the scale of the businesses are quite different in terms of comparing them. I think the important thing to look at is actually the trajectory of the stock over the last couple of years. So if you look at the stock, even in the last 6 months, it's up quite a lot. If you look at over the last 5 years since I came in as CEO, the stock is up more than doubled, right? So I think we think about the progress and trajectory that we're making perspective, and we try not to compare ourselves to brands that we don't think are really in the same zip code as us. Generally.
Okay. That being said, though, it might have doubled, but you're still at $3.22, and that's with the boost of 1.5% on your most recent quarter. I'm just wondering if you think it's time for someone else to try and turn things around at Roots.
I think we're doing a great job. I think the team is exceptional. I'm really proud of what they've accomplished. And I think if you look at the business again, and you think about the performance that we've had, the comparable sales growth, the total sales growth has been really impressive. And we haven't even talked about things like margins. I mean, our margins this quarter were up 430 basis points. And I think if you look at that relative to some other businesses and brands you've mentioned, some of them are really struggling, right? They're struggling with some of their performance in the Americas business. And I think it's great to see that a brand like Roots is on its fourth consecutive quarter of comparable sales growth, margin expansion, EBITDA expansion. So I think that's really impressive. And I think that the team is continuing to do a fantastic job in that regard.
Meghan, I've got to leave the conversation there. I'm out of time. Meghan Roach is the president and CEO at Roots.